How has the business been doing?
So they've been 20% last year, and they were supposed to grow 20 plus this year. And they're launching the product in Europe and Japan and Asia, and it's a small company. They're going to do 48 million this year in sales. I had them doing 51 or 52. The midpoint of their range was like 48.6 million. The numbers were such when they released earnings, they lowered the midpoint to 48.0. The stock went down 20% after already having gone from 6 to 4.25, went to 3.25, and now it's bounced back to 3.5. Now that's pretty stupid if the thesis is right. It's a very illiquid stock. It has a few large shareholders. They probably don't buy more since they're already so big. So when people looked at the algorithms, looked at the numbers, reduced midpoint, reset guidance, the conference call was very poorly handled by a brand new CEO. He sounded very defensive and very evasive on some questions about the granularity on the shortfalls. So it's very poorly handled from the number to the explanation. The simplest explanation was their European launches were deferred a little bit by a quarter or two. They expected a big launch in Germany. They had big launch in Italy this year, and the numbers were really strong. It was a tender for volume. It was a state healthcare system purchase. It looks like their German launch is going to be under budget by $2 million. That was the sole reason for the domestic business was 12%. The international business was up 60%. The second half, the domestic businesses should be up 10 or 12%. The international slows 20 or 30% because Germany is not going to grow as fast second half as people thought. So it's down 2.5 times next year's sales. It's growing 18% this year instead of 20. It was a 2% short. And it's not as cheap as it was at $230 when we bought it, $240, $250 at $350, but it's still very cheap because you have 2 more years of 20% growth since we bought it. So the price to sales ratio is actually lower. So there's no debt, cash flow positive. There's no need to ever sell equity again. The hiccup in the international growth, particularly, Germany, is something that, could be explained all of Europe, but it's that specific situation, I think, that is the delay. And I believe, my model has them doing almost 50 million this year, and then doing over 60 next year, and then doing over 80 the following year, and over 100. That's how I was thinking about this business. They do have a target to reach $100 million in sales by 2029. It's been publicly stated, and it's in their slide deck. So this company should double its business in the next 3 years. That's not easy to with 65% gross margins. I mean, the gross margins went up 200 basis points from 63 to 65. That's positive. So the company is positioned with strong management, a net cash balance sheet, positive cash flow, 18% growth, not 20. 22 next year, not 20. It's all the same to me. I want to sit back, hold this forever, and watch this transition from IV delivery to subcutaneous delivery, from hospital delivery to at-home delivery. Put a little, pump next to you, and you spend 15 minutes having a subcutaneous infusion. If and when they can grow 15% with the international growth rate, if and when the oncology market shifts over, because it's not just the oncology drugs, it's the secondary, immunodeficiency category that also adds to their TAM. Their TAM goes up 10 times if and when they get oncology.
Okay, so KRMD, I own it, so I'm happy. I mean, I looked at it. I thought you're right. People are a little bit overly cautious on $1 million here or there for a small cap company. When you're looking at horseshoes, you're looking at, is it growing? Are they not messing up? If you had said 3 years ago that they'd have international sales, you probably would have said, no, they probably won't. So this is all like, now we're holding them to a different standard. So I still like it.